Hello and welcome to this special report here at XM.com. We'll be discussing the U.S. economy, the Fed's potential plans for policy easing, and the outlook for the dollar. I'm Maria Pachurdes, and joining me is lead investment analyst Rafi Boyadjian. So Rafi, we recently got an upside surprise in the latest jobs report. Can you tell us about the current state of the U.S. economy and how the tight labor market may affect Fed policy going forward?
Well, Maria, that is right. We did just get a very impressive jobs report. We knew already that the U.S. economy was doing well. What we didn't know was it was doing quite so well because days after that jobs report, we got an equally strong ISM services PMI. So it does appear that the U.S. economy is actually picking up steam now rather than losing steam. So that really makes things difficult for the Fed in terms of cutting rates very soon. And if you dissect that jobs report, it wasn't just that strong beat in the headline number, in the payrolls figure. We also saw very strong wage data. We're seeing wage pressures picking up in the U.S. labor market. So that could potentially become quite a headache for the Fed going forward. So it does appear that there's no recession in sight, and in fact the US economy is more in danger of overheating rather than heading into recession. So as far as the Fed is concerned, there is no rush to be cutting rates. We did see investors price out a rate cut for the March meeting, but most investors seem certain that a rate cut is likely at the May meeting. But if we have a look at the data, even a May cut is very questionable. There's a possibility, of course, that this rosy picture of the labor market might not hold, because we've seen a number of big corporations in America announce some major job cuts. So if we see a pickup in layoffs, things could definitely turn around. But for the time being, it's looking, a spring rate cut is looking very unlikely from the Fed.
Okay, so turning to the dollar now, what's the near and longer term outlook for the currency if the Fed does end up cutting rates in the summer?
So because of all those factors that we were just discussing, the dollar does really stand a good chance of making further gains in the first half of 2024, because we did see at the end of 2023, dollar come under pressure, but January we've seen a very strong rally in the US dollar. We've seen a rebound in treasury yields. Now, of course, there are some risks, as I mentioned, potential pickup in layoffs. But aside from the economy, we also have, of course, geopolitical risks also supporting the dollar. So that should probably be supportive for the next few months at the very least as well. But of course, we do expect inflation to eventually reach 2%, because of course we've got the sort of a bearish outlook for oil prices, and of course we should see potentially the economy eventually lose steam. So the Fed will probably start cutting rates somewhere in the summer, possibly in June. But until that period comes, the US dollar is expected to remain fairly strong. And the thing to consider here is that in the second half, even if we do see the dollar kind of maybe enter a more sort of a convincing downtrend, even there it's going to be support for the greenback, because of the fact that if we compare if you look at what's happening in the other major economies in the Eurozone, the British economy, in Japan and China, they're all struggling. So it may well end up with a situation where the dollar is the best of the bunch by the second half of 2024. Of course, there are some other downside risks we should consider. For example, investors might start to get nervous come election time, because of the fact that it's looking like it's going to be Trump versus Biden all over again, and that might make markets nervous. We also have, of course, the ongoing sort of rising debt problem in the US. It's possible, we can't rule out Congress deciding to cut back on spending, and that would be, of course, negative for growth, and that would also allow the Fed more room to cut. But other than that, I think even in the more negative scenario, the dollar should maintain a decent amount of support, because of the fact that other major economies aren't doing as well.
Rafi, thanks so much. And thanks for joining us for this special report here at XM.com.